Hello friends, Taxo welcomes all of you for the today unique session on the UAE Corporate Tax, where experts from on our panel will be answer all your questions. And this is a totally unique program which we develop for you. And experts on our panel are jointly have experience of more than 50 years plus. And believe me, this session is going to be very informative and knowledgeable on UAE Corporate Tax. Now, time is come to introduce to our esteemed panelist. Our main panelist is the CA Dr. Atul Gupta ji. He was the past president of the ICI, highest accounting body in India, and currently board member of the IFAC and XBLR International, top global bodies for the accounting professional. He has more than 2 decades of experience in the taxation and differential finance field, and deliver more than thousands of lectures in different international and national forums and globally. And he authored numerous books and published many articles in national and international journals and the leading newspapers. Let's welcome Atul Gupta ji in absentia. He will join in a short while. Basically, he's traveling. And next our panelist is the CA Chirag Gupta ji. CA Chirag Gupta is the founder and the partner of the RMC Group Dubai. He is a chartered accountant, post accountant, and company secretary, having more than 15 years of diverse experience in the UAE, Zambia, and India. He specializes in corporate tax, statutory reporting, internal controls, and all financial functions of the finance. He is also the frequent speaker at the technical forums on taxation and compliance matters, including universities and also radio talk shows. And he regularly via articles in the different journals. Let's welcome CA Chirag Gupta ji. Welcome Chirag ji. Yeah, next panelist be the CA Nishant Rayma ji. He is a qualified chartered accountant. Nishant in the field of the international taxation and BPS projects of the OECD. He has almost 2 decades of experience in the UAE and in the big consulting firms, Big 4, Big 10, corporate tax practicing as a corporate and international tax partner with the RMC Consulting UAE. He is the founding member of the Taxation Society Dubai, and he has published 2 handbooks on the UAE corporate tax. Welcome and thanks CA Nishant ji for sparing time for the today's session. Friends, thanks for your overwhelming response. We received more than 100 questions for this program, and if this question pertain to the key topics, so what is the UAE corporate tax? Most of the technical questions pertain to the free zones and remuneration, managerial remuneration. Due to the proximity of time and benefits of we allotted initially 20 minutes for the deliberation on the free zones and the managerial remuneration, which taken by the Nishant Rayma. And prior to that, I will request to see Chirag Gupta because almost 45 participants. I have the name of all these 45 participants. Those those want to know about the overview of the UAE corporate tax. So I will request to see Chirag Gupta ji to give some overview on this. So now over to CA Chirag Gupta ji to give us the overview about the UAE corporate tax.
For the brief introduction. So coming straight to the topic. So as we all know that, corporate tax news officially was announced by the government on 31st of January 2022, and the law was published on 9th of December 2022. So the government has given more than 2 years for the businesses to prepare in advance, because it's the first time in this part of the world that the corporate tax has been introduced. So what is the objective? The objective over here is to reaffirm the UAE's position in the world as a tax transparent country and to commit to the international best practices. Now, as we all know that as the world stands, it's UAE corporate tax. So all the individuals having all kind of salary income, they need not to worry. There is no tax on your personal salary. It's only taxed on the corporate, on the company. So what is the meaning of corporate tax? So corporate tax is nothing but whatever the company is earning, which means the tax is on the profit. So whatever earning minus the expenses, which is sales, you deduct all the business expenses as allowed under the corporate tax law. The net remaining taxable profit on that you have to pay tax. Now, what is the tax rate? So tax rate, again, they have kept very low. This is one of the lowest tax rates in the world, which is single digit 9%. But over here, again, the government has given us relaxation. It says that first $100,000, which is 375,000 profit up to, you pay zero tax. And profit over and above 375,000 dirham, you pay only 9% tax. So let's say if the company had a turnover of say 1 million, out of that 1 million, there was, let's say, a 50% margin. You had a gross profit of 500,000. Out of the 500,000, considering all the taxable expenses allowed as per the corporate tax law, is, let's say, 300,000. So remaining profit is 200,000. So on this 200,000, you don't have to pay any tax. So because the profit is less than 375,000 dirham. But assuming the profit, let's say, is 500,000 dirham. So in this 500,000 dirham, you will deduct 375,000 dirham, and on the balance, you pay 9% tax. Now, also, there are certain exemptions in the law, like, all the government companies or any company who are into natural resources extraction, they are all exempt. Plus, certain things like dividend or capital gain, subject to certain conditions, are exempt. Plus, the government has given tax grouping. Please mind that the tax grouping under corporate tax law is different from VAT. I can go on and on, but considering the time paucity, I will stop here, Manojji, and further, maybe since further I can elaborate or discuss later if we have time. Over to you, Manojji.
Now, after CA Chirag Gupta ji, over to CA Nishant ji to start a deliberation on free zone and the managerial remuneration, because most of the question around these two technical questions. Over to CA Nishant ji.
Thank you, Manoj ji. As you rightly mentioned, yes, I was going through the questions, and for the benefit of all the participants, I will be reading quickly the questions so that everybody can understand that the questions are covered by the after question whatever I will be speaking about the Cabinet Decision 100 and Minister Decision 265. So the first question from Muhammad Ali, clarification on free zone entity. Then one question is just DMCC. DMCC very hot subject since it is not a designated zone, so we can expect more questions, and accordingly we have more questions on DMCC. Then free zone understanding, more details on free zone. I'm reading this question so that participant can understand that yes, that questions are covered. Then taxability of the export made by free zone entity and high sea sales by the free zone company under the UAE city law. High sea sales is also very hot topic. I'm sure many of the participants want to understand what will be the treatment for the high sea sales. Then the high sea sales for the free zone entity. Then corporate tax for manufacturing. Manufacturing is also one of the qualifying activities. So accordingly, we'll be covering this as well. Then latest amendment for the qualified commodity trading for free zone. It is restricted to physical trading only or paper trading. Third part shipment is also allowed. This is a very important question because in this new amendment, they added qualifying commodity trading activity as a qualifying activity. So we'll be speaking about that as well. Then holding of the equity share by the qualifying free zone person and getting dividend will be considered qualified income or not. Now this also here they have added one word that shares and other security hold for the investment purpose. Before it was not an investment purpose in the Minister Decision 139. So we will be speaking on this as well. Then very funny question: how to save corporate tax. So there is no saving of the corporate tax, but yes, efficient compliance of the corporate tax law resulting a minimum tax liability, that is called a legitimate tax planning, and every citizen has an inherent right to do the tax planning. So it's not saving corporate tax, rather it is paying the right amount of corporate tax by efficient compliance of the corporate tax law provision. Then there is one question asking regarding CA training, CT training, corporate tax training. So yes, we do provide corporate tax training for the corporate team as well as for single individual tax manager or the finance team. At present, we are running the corporate tax workshop by the RMC and Taxo together. And I'm a speaker at the Dubai chapter. There also we are running the training. So accordingly, individually you can separately you can contact us whether you require a corporate tax training for your entire corporate tax team, finance team, or individual basis. We can provide such training. Then there is more questions on the managerial remuneration. So this is also very hot topic. One question as per our MOA, the managing director is to be paid 7.5% of net profit as a management fees every year. Will that be deductible expenses? The memorandum of association was drafted in 2015. So one very clear principle is that whatever you pay to the connected person is defined under Article 36 of the Corporate Tax Law, and managing director either as a shareholder, owner, or partner or director. So that way he will be qualified as a managing connected person, and anything you pay to such connected person need to be benchmarked. Those benchmark amount will be allowed as expenses. Excess amount will not be allowed as expenses. So we will be speaking on this at length subsequently. Then more questions on this. Yes, can a drop shipment, high sea sales by JABSA entity qualify for qualifying income? Yes, JABSA is a designated zone. Now, high sea, we will be speaking on the high sea sales subsequently. Free zone versus designated zone. Very important question. A lot of people have this concept that the free zone by default become designated zone. No. Or designated zone is a free zone or not. So first, every free zone need to be qualified free zone. That list is yet to released by the government. But if you read the designated zone definition, which is under Cabinet Decision 100, there before they used this definition was in the Ministerial Decision 139. At that time, they said designated zone is the zone which is specified, and now they have changed the word specified to included in the list. So to be a designated zone, the first and foremost requirement is it need to be a free zone. So at present, authorities are saying that you can ask your authority, but since on 3rd November, they have changed the word from specified to included, so we can expect a list of the free zone. As many of you knows, we have almost around 42 plus free zone, and many of the free zones will be not sitting in the definition of the free zone. Maidan free zone allow offices in the mainland as well on the selection basis. So this all yet to be clear. We are expecting either some more clarification or some guide. The way on every subject we are getting the guide, we can expect some guide from the FTA to clarify the concept of the free zone and designated zone is clarified that as per law number 8 of 2017, which was issued under the VAT. Those which is listed over there somewhere around 24 free zone, those free zone will be regarded as a designated zone. So we will be covering this, but since this was very important free zone and designated zone concept, so I thought that at this stage I can clarify, since it is not related to qualifying activities. Then transfer pricing and related party. So this also will be briefly touching about transfer pricing at a time. This question will also be answered. Free zone company is under corporate tax or not? One thing at this stage only I want to clarify that every free zone company is very well under the net of the corporate tax. In the sense, every free zone company need to register with the Federal Tax Authority and file the return. The only incentive given is whether 9% corporate tax, which we call the regular city regime, will be applicable, or 0% corporate tax regime will be applicable. So, whatever incentive is for the payment of tax liability, whereas registration and filing of the return for every free zone business is must. Then what is the qualifying and non-qualifying free zone person? We will be discussing the provision of Article 18 of the Corporate Tax Law. At that time, we will be touching upon the same. I would like to know about the transfer pricing. We will be speaking about the transfer pricing. Yeah, this is very important question. Though we do not have much time to take it, Akhil Jain has put. I wish to set up the family office in DIFC or free zone or mainland with the sole objective of investing in all kind of asset classes globally or regionally and local wealth. Will there be applicable or not? Now we are redomicile many companies in our financial free zone, the AFC and ADGM, and they provide actually this question come under the family foundation. Yes, if you do the proper planning for the family foundation, you can get a benefit of 0% tax since certain income is tax free, like the dividend, the interest, those income, some rental to the individual is also not taxable. So we can discuss on one-to-one basis. But yes, we are forming a lot of family foundation, especially in the financial free zone, and many of the benefit available to such financial free zone if the family foundation is formed correctly. Then the owner who work as a CEO can eligible to get the beneficiary as an employer like salary. We will be discussing about this while we take the managerial remuneration. Then tax treatment of DMCC company for out of scope sale. I think that out of scope sale concept is under VAT, but DMCC and whether DMCC certain activity will be eligible for the 0% or not, that we will be discussing here. Then what are the qualifying income in the corporate tax? Whether trading in the equity taxable, even if the equity is carried under the DMCC free zone. Again, we will be touching those 14 qualifying activity at a time. We will be addressing the same. Then who is exempt under UAE corporate tax? Free zone entity exempt? As I said, free zone entity is not exempt. Please, at this stage, I want to clarify that if you are a qualifying free zone, you will avail 0% corporate tax. When we say 0%, it means the free zone, whether qualified or not qualified free zone, is not exempt from the tax. Your rate is 0%, whereas other businesses will require to pay the tax at 9%. Qualifying free zone, we will be discussing the provision of Article 18. Free zone recent clarification, we will be discussing Cabinet Decision 100 and Ministerial Decision 265. Is investment in real estate subject to corporate tax? We also want to know more about the taxability of the free zone. Investment in real estate. If it is through the individual, then the income on such investment maybe not subject to tax. Why I'm saying maybe there are certain conditions which need to be fulfilled. If you have a particular scenario, please you can always contact us. We can guide you. Walkthrough of the corporate tax for family office. As I said here before, that yes, family foundations are eligible for certain incentive provided by the corporate tax law itself, and accordingly, if that family foundation are formed in a particular free zone, which is the financial free zone, then certain benefits are available. Entire provision of the family foundation will not be taking. Last we took it and it almost took a 30 to 40 minutes. But since there is a two question, both of you guys can directly one to one, you guys can send the email or call us, and we will be clarifying more on that. For the larger interest of the audience, we'll be speaking more. We will be speaking more on the free zone and managerial remuneration. Since 70 to 80% questions are on these two subjects. What is the tax impact on trading distribution company operating without movement of good? A local person own 100 property having no license, and his total generated net income yearly is so much. Okay, now this is also a very important question. We organize, we restructure many of the company here. All the landlord, they have say here in this question, Mohammed Ghosh is saying 100 property. Yes, the landlord, they have multiple properties, say 50, 100, 200. So what they do, they form a one maintenance company, and rental income is booked under this maintenance company. So now one need to understand this. I will be just touching upon on this. If this rental income is directly going to the landlord, all the natural person's income is tax free. But if these properties are under any business or any company, in that case, any income on these properties will be taxable. Of course, the title deed is very important. If title deed is under a landlord or owner name, again, if you have given this business to your maintenance company, then there may be a problem of the paying the tax. So this also we have restructured recently many companies, but overall a broad concept is that any income of the individual person, the natural person like you and me, will not be subject to tax, whereas same property is under any company, any business, then any income on such a property or a business will be like, even if you sell the such property and if it is under a company name, then it may be taxed 9% corporate tax. Then holding of the equity share by qualifying free zone and getting dividend will be considered qualified income. Now recently under Ministerial Decision 265, they have added the word for investment. So before it was holding of the equity share and security. Now they put the condition of the investment, and one more condition they have attached, that such shares should be, the minimum period of holding of such share should be 12 months. So when we say investment, it means it should be a serious investment. It shouldn't be a casual investment, which we do say 1 month, 2 months, 3 months, or less than 12 months. If you sell, then any income on such share will not be eligible for the tax. So this was the all question I was reading, so that the audience can understand that questions are very well considered. Wherever possible, we touch upon. If the details answers require, you can always on one-to-one you can contact us. So now in 10 minutes I will give you the overview of the free zone. How does the things work with the free zone? There is Article 18 of the Corporate Tax Law, which provides 6 conditions to be a qualifying free zone from the free zone. So if you have a free zone person, you have a business in the free zone, if you satisfy these 6 conditions, then you become a qualified person. Once you become a qualified free zone person, then you will be eligible for the 9%, for the 0% of corporate tax. If any of these conditions are not satisfied, then you have to follow the regular corporate tax regime and you have to pay the 9%. What is those 6 conditions? First condition is such free zone person need to have a substance within the free zone. So when we say substance, now again in the new pronouncements, they have described more that your revenue generating activities and your maintenance of substance need to be in the same free zone. So suppose you have a distribution company in the JAFSA and you have a branch in DMCC. All the activities getting conducted from the DMCC, whereas you are booking the income in the JAFSA, that will not qualify as a substance. So they have clarified this before. It was the stand of the many of the consultant that yes, you can have a substance in any of the free zone irrespective of the revenue generating activity, but this is very well covered. Now, second, before they said that you have to have adequate employees, adequate qualified employees. Now, first time they added the word full-time. It means the person need to be a full-time employee to make it a adequate substance. So this is also one requirement that how to understand whether we have adequate substance or not. It means when we are running the business from the free zone, we should have an office, we should have adequate furniture, we should have adequate qualified employees. It shouldn't happen that 5 office boy we put in the office and we say that we have a 5 employees, so we have adequate substance. No, it will not work. So it should be adequate qualified full-time employee. Again, one person, otherwise the window will open that one person is employee in a 5 company, since now they allow to work for more than one company, but the part-time working is allowed in UAE. But that will again in this new pronouncement they have clarified you have to be a full-time. So first requirement is substance. Second requirement is transfer pricing regulation. So entire Article 34 of the Corporate Tax Law, which speak about arm's length price for the control transaction, whenever you do the transaction with the related party and connected person. Related party is defined under Article 35. Connected person is defined under Article 36. So if you do any transaction with these two, then those transactions need to be at arm's length. That's called the transfer pricing. Transfer pricing nothing but the pricing for the control transaction. This is nothing but the shifting of the profit. Suppose there is a two related party, and if you don't do the proper pricing, then you can end up shifting the profit. So that also we touch upon the transfer pricing. So secondly, the transfer pricing. Third and most important condition is that such free zone business undertake the qualifying activity and generate the qualifying income. So the question was, what is the qualifying activities? Qualifying activities is defined under a Ministerial Decision 265, which replaced the Ministerial Decision 139. In Ministerial Decision 139, there were 13 activity which was regarded as a qualifying activities. Now they added one more, IP. So any qualifying IP, and if you generate the income from such a IP, then that will also be regarded as qualifying activity. Please note that this IP income before was an excluded activity, which now become a qualifying activity. So again, we go back to the Article 18. We will be a little bit going fast in the interest of time. So Article 18, 6 condition: substance, transfer pricing, qualifying income. Then once you satisfy these 3, then such audit, such free zone person need to conduct the audit. So audit is mandatory. Then suppose you earn the income which is not a qualified income, then the limit, the window they keep 5% or 5 million, whichever is lower. So in this, they are saying no problem if you are earning the income, qualifying income from the qualifying activity to the extent of 95%, then that 5% will not create a problem. Please note that if this become a 6% or more than 5 million, then your business will be subject to 9% for coming 4 years. So total, the block of 5 years. Again, this is very important that if you are located in free zone and from 1st January 2024 for 1 day, if you do not comply with any of the condition, this may cause you to pay the 9% tax for the coming for so total 5 years. So it is very important. Immediately now the way we are discussing with all our clients, that immediately they have to implement this new pronouncement, so that they start complying with the condition from the 1st January 2024, which is almost 2 months. So that's very important. So de minimis 5%. This is also one requirement. Now we will be, in the interest of time, we will be touching upon the what happened on the 3rd of November 2023. So they repealed the Cabinet Decision 55 and they come up with the Cabinet Decision 100, which is almost on the same line. Only IP they removed from the excluded activity and they put under the qualifying activity. And then one very important changes was done, that designated zone definition was under ministerial decision, which they shifted under the cabinet decision. Now, it is very important to understand here 4 authority. One is the law, then come the cabinet decision. Cabinet decision is duly signed by Prime Minister Sheikh Mohammed bin Rashid himself. Then ministerial decision is issued and signed by the minister, and then FT decisions. Mostly FT decision for the administrative purposes, and then the ministerial decision, all the routine matter. Wherever there is a significant matter, it will be under the cabinet decision duly signed by the Sheikh Mohammed. So now this is very important, that why the shifted designated zone definition from the ministerial decision to the cabinet decision, and they changed the one word, only one word they changed. They say that those will be regarded as free zone, which is before, they said, which is specified under the corporate tax law. Now they said which is included in accordance with the corporate tax law. So specified and included. That way we can we will be said to presume that more either least or some of the form, they will specify who will be regarded as a free zone. So this is the new pronouncement. I don't know whether I am running short of time or how. Manojji, you can just or I can finish the managerial remuneration in 5 minutes.
Yeah, sure.
All right. So now this was the free zone. Any more question on free zone on one-to-one we can answer. Now we will be discussing about the managerial remuneration. Again, this is very hot topic. Article 36. Look here, we have a corporate tax. Corporate tax they announced on 31st January 2022. We were following the OECD for since 4 to 5 years. When they announced the corporate tax on 31st January 2022, and immediately the question came to our mind on 1st February. It means on the next day of the announcement, I put this question even on the public platform, that what will be the managerial remuneration? What happened here? 70% is the SMEs. It means those are closely held companies run by the owner or relative of the owner. So here we don't have, we have very less bigger company, but mostly it's a small or medium company run by the owner. So what will happen? Suppose your business has a 1 million profit. What you will do? You take entire profit as a salary, since there is no personal income tax. Like before corporate tax, we were thinking that how they will implement it, because there is no personal income tax. Whereas they want to do the corporate tax. Corporate tax and personal income tax go hand together. But here they come up with a new concept called the connected person. It means any relative, any owner, then the director, then officer, and related party of these three, if it is employed within a company and you provide any benefit to such a person, whether owner, shareholder, partner, or officer and director, or any of the related party, you provide any benefit, salary or perks or any benefit, that need to be benchmarked. When we say benchmark, it means we need to work out the fair market value. So now hot question is, my owner is running the company. How much salary I can pay? Like one question was, I am paying 7.5% as an incentive. whether that will be tantamount as salary. Question is very simple. One need to understand. So is there any guideline that how much or what should be the right amount? Yes, under the UAE commercial law, there is a guideline that if you are a profit making company, 10% of the net profit can be. They are not saying that you should put the 10%, but can be. So there is some justice. Suppose your company is in a loss, then up to 200,000 you can pay the salary to the managing director. There is a certain guidelines under OECD as well, which provide that on a need base, you need to understand whether you require manager, you require a CEO or not. It shouldn't happen that you already have a CEO and CFO, and top of that, your owner is also getting salary by utilizing that position. So it will be on a need base. There is no certain amount prescribed by the government, and it is not possible to prescribe a certain amount. Very important. First time maybe you might be hearing, but remember, if your manager remuneration increase or is more than 1 million, and if it is tantamount as a business, then maybe personally you will end up becoming subject to the corporate tax. More clarification on this concept. This is a very new concept. More clarification is yet expected. If it is not in the form of salary or personal income, if it is in form of like as you say incentive, commission, it means you are doing business. So individual, whether you have a license or not, but if you do business or business activity, will be subject to corporate tax. So that provision also, while drafting your appointment letter or commission agreement or incentive agreement, you have to be very careful by keeping these things also in your mind. So manager remuneration, what will be the limit? There is no limit. It should be fair. Whatever manager remuneration you will fix, it need to be benchmarked. It need to be understand what will be the fair market value. There are certain guidelines under the commercial law, but every person will require to do the due diligence before fixing the managerial remuneration. And it is very important that from the day one, it means from 1st January 2024, you pay the right managerial remuneration. It shouldn't happen that you pay something else in January and then subsequently you change it, then gas can kick in. So it is very important to look this provision within these 2 months. I think I covered the free zone manager remuneration in the interest of time. A very bigger subject, but we cannot cover everything. You guys will be having our contact details for one-to-one. You can always reach out to us. Thank you so much. Over to you, Manoj ji.
Yeah, thanks, CA Nishantji, and for the wonderful and deliberation, and take all of us into the deep into the UAE corporate tax. I think your last half an hour interaction and deep dive into the subject will helpful to the all the participant here. I think there is a lots of topics you already covered, and the maximum questions you try to cover. So I request to see a Chirag Gupta ji. There is some 8-9 questions be raised by the some people in the Q&A chat box. I will request to him he answer these questions, and if any critical topic is missed during the discussion, because I'm not the subject matter expert, but so I request Chirag ji to also deliberate on this and give the insight. So over to Chirag bhai.
Thank you, Manoj. So coming straight to the questions, I was seeing the group chat. Also, the questions raised on the earlier form that we received, majority were also apart from free zones and management remuneration. It was also on the group registration. So first of all, the group registration requirements are totally different from what are the group requirements under the UAE VAT law. Number one. Number two, it might be that under the VAT law, the company is having a group or an individual registration, but in corporate tax law, it can be different. Like say in VAT, you are having group registration, but under corporate tax, since the requirements are different to form a tax group, you might be having 2 separate registrations. So first of all, let's discuss what are the requirements to form a tax group under the UAE corporate tax. So first and foremost, you have to consider that there's a holding and subsidiary structure, and that holding company is holding minimum 95% of shares or voting rights directly or indirectly. This is number one. Number two, all the companies under the group registration should have the same financial year and should follow the same accounting standards. And neither of these companies should be a qualifying free zone person or an exempt person. So once these major four conditions are satisfied, then we can form a tax group. And as we all know that when you form a tax group, then it is the responsibility of the parent company to file the return and to pay taxes. But we cannot overrule the responsibility of the other members in the group. Jointly and severally, all are responsible. Regarding the registration of the tax group, presently all the companies have to register individually, and then there would be further guideline how we can club it. So presently, if you want to register it separately under the corporate tax through Imara tax portal, and the government will soon announce when you can club it. Also, I was seeing there was further queries on real estate as well. So I would also like to talk about the real estate. So as we all know that for UAE, real estate is a very important segment and major contributor to the economy. So obviously, UAE will not, there would be certain relaxations under real estate. But first and foremost, let me clear it out that if any individual is having, let's say, any real estate income for investment purposes, which doesn't require a license, then it would not be covered under the corporate tax law. It may be 10 properties, it may be 100 properties or 1,000 properties, as long as he or she is the individual owner of the property and this activity doesn't require to obtain a license from the authority. But if the real estate property is owned by any company, or if it is a real estate company or real estate broker, then it would be taxable. Also, if the real estate, let's say, property is owned by any foreign company, then again it would be taxable. So you have to be very, very careful about how you do the transaction, see the transaction, because many times, as an auditor, you have come across many audit reports in which the real estate property is owned by the individual, but the property is sitting in the books of the company just to increase the net worth of the company. So we have to be very cautious. We have to check with your auditor, check with your financial statements, what in the past you have been doing and rectify it. Because as you might see that, the big date, which is 1st of January 2024, is just around the corner. We have just 1.5 months left, and now is not the time. We have to act very fast, very diligently, because once the tax goes live, you will not have time. And this is saying we will not have time. So now is the right time that we act. Or if you don't know, please go through the law. The government is very supportive. Just like I said, a couple of weeks back, the FTA had a very impressive seminar in which they have invited public all over UAE. We have also visited me and Nishant over there, and they have mentioned that we understand it's new for everyone, but ignorance cannot be an excuse that it's new, so I was not aware. No, you cannot say that. Everything is available. The government is doing all the best webinars, seminars. So please attend them. Please get abreast, especially your accountants, especially the business owners as well, of the new regime. Moreover, further questions, secondly, that I would like to talk about is penalty. There was further questions that what are the penalties, what is the registration requirement. So like any new law comes in force, there are of course penalty for non-compliance. So for the penalty, there was a cabinet decision number 75 of 2023, which is already been in effect from 1st of August 2023. So there are further many penalties mentioned, but I cannot go through each and every penalty. But yes, we all know that penalty is always there, but let's not focus on penalty. Let's focus on the compliance. So registration has already been started. You can go through Imara tax portal, the same portal which you are doing for the VAT if you're a well-registered company. So this is I like about UAE. I mean, you don't have to create a separate login for the corporate tax. Same login you can use. And registration process is very simple. It will not take more than, I don't think it will not take more than 10 minutes, provided you have all the requirements in advance in place. Like if you're going for registration for a company or for an individual, and once you submit the application, FTA will review, and if the further requirements are there, they will come back to you, or if everything is okay, they will approve the registration. There was one more question for the return filing. So as of the moment, the written format is not released by the authorities. We're still waiting for it. But the return filing due date is 9 months from the end of financial year. Majority the companies over here in US following Jan to December as the financial year. So assuming Jan to December, so your due date would be 30th of September 2025. So we have sufficient time. Again, very commendable of the UAE government that they are giving very good time for the taxpayers to to calculate, to see what is allowed, what is not allowed under the corporate tax law. And second, the question was raised, what is how to calculate the profit? So which is again a big exercise, because not always your accounting profit would be the same as a taxable profit. Because accounting profit you are doing as per your IFRS accounting standards, but we have to see as per the UAE corporate tax law, certain expenses like entertainment expenses are only around 50%, so which you have to add back. Then there are certain expenses are not allowed at all, like bribes or illicit payments, or like ITA fines, you have to add back. So now the role of accountant is very critical, because how they make the chart of accounts. Right now, when we go for many times we have visited, me and Nishant ji, to many clients for corporate tax implementation awareness session. We see that, accountant, again, with due respect, they are booking the entertainment expenses, sometimes in office expenses, sometimes in sundry expenses, sometimes in miscellaneous. And after the year end, when we will go to return file, they will not know. They have to go to each and every transaction line by line to understand where they have posted entertainment expenses. So to the right time, we align your chart of accounts. What is, you should have a separate heading like entertainment expense and not just post randomly anywhere. So I'm just giving a brief flavor, what changes we should implement as a good corporate governance practice, so that the corporate tax, when it is there, it's live, we don't have any issues. Manojji, I hope I was able to answer most of the questions. Nishantji, if you like to take up some of them.
Yeah, one question which though is not very clear, but we can touch upon. Many of the participants ask about high C sales. So what happened now? They added one more qualifying activity called the qualifying commodities trading. So those commodities, if it is listed on any recognized stock exchange, in that case, those will be regarded as a qualifying activity, and that may not be from the designated zone. So distribution activity is still required to be conducted from the designated zone. So whenever you are importing the good, it should be imported through the designated and exported through the designated zone. Whereas qualifying commodities, you can do from any free zone, so long as those commodities like a metal, minerals, or agriculture product, those commodity, if it is listed and the rest are available on any recognized stock exchange. One more thing one need to understand, that those commodities need to be traded in the raw form. So it shouldn't be a pack all process. As long as those your high C is conducting such activities, then you may get a benefit under this qualifying activity. In that case, you will not require to be in a designated job. I hope that will clarify your high C sales. As such, there is no specific answer to the high C sales. And distribution activities still need to be from the designated zone. Any other questions on the free zone? I'm just scrolling down. Are only qualifying free zone now eligible for headquarter activity to be zero rated or weak? Or it can be any other free zone, even not qualifying. Look, to get 0%, you need to be qualifying free zone person. So if you are not satisfying any of the Article 18's condition, then you are just a free zone person liable for the 9%. So it is important for you to be a qualifying free zone person to get 0%. corporate tax regime. Any other questions on the free zone?
Nishanji, one interesting question has been raised. What about a mainland? The name I think is Kailash. Kailash is asking, what about the mainland entity having branch under qualifying free zone? Can they would be a tax group or separate registration required?
The Article 11 specifically provide that branch is nothing but the extension of the headquarters. So in that case, whatever the resident status of the headquarter will be of the branch. So in this case, the branch is nothing but the LLC at the mainland, and the books of account need to be consolidated in the headquarter. So see, branch is not a legal separate entity. So if you want to make a group as per Article 40, which provide for the certain conditions, 7 conditions to form the group, it start that holding company and subsidiary need to be a resident juridical person. So whereas a branch is not a separate juridical person, hence branch and headquarter cannot form the group. Rather, branch books of account and financial statement will be clubbed with the headquarter, and then you have to file the single tax.
Right. Also, Manoj ji has asked, free zone person can apply for small business relief. So they have mentioned the word free zone, not qualifying free zone. So Nishanji, of course, the answer would be different, right? For a free zone and qualifying free zone.
Correct. So once you satisfy the 6 condition of Article 18, then you are eligible for the 0% tax, and even your 5% income will be eligible for the 0%. But suppose you are not qualifying the 6 condition, any of the 6 conditions, it means you are a free zone person, but you are not a qualifying free zone person. So such free zone person is under the net of the regular corporate tax regime, which is a 9%. All the people, all the businesses under the regular tax regime can avail the SBR, small business relief, as long as their income is 3 million or less. So that way, yes, such free zone business will be eligible to get benefit of SPR, so long as such free zone person is not a qualifying free zone person.
Also, next question by Mr. Sajid, how to register a qualifying free zone? Is there any deadline to register? I assume he is talking about how to register for a qualifying free zone company. And as we already discussed, that registration is mandatory for all the companies, whether you are a free zone, whether you're qualifying free zone or a mainland company. Regarding the deadline, again, this is very commendable of the UAE government that there is no such deadline for registration as long as you register before the tax return due date. So assuming if your financial year, let's say Jan to December, so your tax deadline would be 30th of September, which is the return filing due date. But ideally, you should not wait till the last moment, as when to submit the application, the FPA also needs some time to review for that. I hope this answers your question, Mr. Sajid. And next question for you, Nishanji.
I would like to add what you said. I think the participant want to understand, is there any mechanism to understand whether it is a qualifying free zone person, and for that you require a separate registration? The answer is no. You have to do the registration on your corporate tax. Now, whether you are a qualified free zone person or not, for that is simple. You have to do the self-assessment to see whether you are coming under the bracket of qualified free zone person. If yes, then you can file the return as per 0%. If not, then you have to pay the 9% tax liability. This is the logical process, though the Federal Tax Authority has not come out with this process, but they have not made it mandatory to do the registration as a qualified free zone person. Only one registration required, which will be the registration under corporate tax law. Over to you, Chirag.
Yeah, so next question is by Shikha. Mainland company having branch in qualifying free zone. Can it be eligible for 0%? I think the same thing which you have covered earlier, Nishanji. Maybe I think the participants have this question and they understand it's a very tricky topic. So if you can briefly summarize again in the interest of participants.
See, as I said, there is a specific provision within the four corner of the law. So, Article 11.5 specifically speak about that branch is the extension of the headquarters. So, whether branch is located in the mainland or free zone or foreign, every under the International Financial Reporting Standard as well, branch books you have to club with the headquarters. And accordingly, under the corporate tax also, branch financial statement need to be incorporated with the headquarter, and whatever the tax position of the headquarter will be the tax position of the branch.
Right. I hope this clears the question. The next question I would like to take again the management membership, Nishanji. I think we have already covered, but since they have raised the further question on your deliberation, the name is not mentioned. It says, can owner who is involved in the administration be eligible for the salary and other financial benefits?
Okay. So now manager remuneration, first you have to demonstrate such owner is conducting some function. So you need to have a JD, job description, for or whether you are doing admin work or you are doing any other work. See, there are certain owner, they just come to sign the checks. Those owner may not be eligible for say higher salary. Maybe they can eligible for some management fees, or if they are sitting in the board of director, then director fees. But those owner may not be eligible where the functions of the CEO is performed by professional CEO. So you will require to understand the what timing, what job description, and accordingly such owners will be eligible for the salary or manager remuneration. For that, again, you will not require to do the labor contract the way we do for the employment contract. You can always have the agreement with the such owner or shareholder, and you can fix the fair market value as a remuneration. To answer your question, if such owner is discharging the duties of the administrator, then such owner will be eligible for the salary. And what salary? You have to benchmark with the same level of company, same size, and same nature of duty. Similar salary owner can be withdraw from the business.
Right. Manojji, can we take a couple of questions or we are already on the time?
Yeah, you can take. I think no issue.
Okay, thank you.
I think objective of the today's session is to answer the questions. So I think you can take.
Chirag, I want to add in manager remuneration. Like yesterday, we were having a big event in Texas and society, and 4 or 5 people run, and they asked me that, okay, so no, we want to pay. We are paying since 4 years. We want to pay 50,000. So what? Better tax authority will come and say, no, don't pay 50,000, pay 10,000. To clear this platform also, you can continue paying the salary, whatever salary you deem fit to your shareholder or owner. But when we say what salary allowed, this is allowed as expenses for the corporate tax fund. So suppose you are an owner, you are drawing say 50,000, or you want to draw 50,000, you can continue debiting the same to your profit and loss account. But when you prepare your statement of taxable income, at that time only fair market value of the salary will be eligible for the expenses. Balance you have to add back to your net profit, where you already debited your manager remuneration, and accordingly you have to calculate your corporate tax liability. So FD or Federal Tax Authority will not stop you to pay the salary. They will not fix your owner's salary. You can continue paying as long as you are ready to pay the tax, which is 9% on such additional remuneration. You can continue paying the salary at the amount whatever you do fit. Chirag, over to you.
Right, thank you. So I think this answers a lot of other questions. I can see majority participants have asked about the director remuneration, about the owner salary, bonuses. So I think this one word summarizes all majority of the questions. But before we sum up, let me take a couple of questions. Next question is by Abdullah. Yes, Nishanji. He's asking, what about business structure relief?
Small business
So
structure.
I think, yeah, he's mentioned business structure relief, but I think he meant to say small business relief. So I think majority of the companies in UAE is 80% are SMEs. So please, if you can enlighten us, Nishanji, on that.
Okay. So again, little bit I want to add in the manager remuneration because a lot of questions I can see. See, here we have a culture that mostly we employ our relatives, right? So you have to be very careful. The definition of related party under Article 35 is altogether different than ISA 24 related party disclosure. In International Financial Reporting Standard, we are doing the disclosure for related parties since long time, but there the related party is altogether different. Article 35 is very wide. Your fourth level of kinship will be regarded as your related party. For example, you have a company and your great grandfather's branch, anybody employed in your business, you have to do the benchmark the salary. Suppose they are having the business or a company and your company doing the transaction with such company, those transactions need to be benchmarked. So, there is a very far reaching. As per the custom, mostly we employ our relatives, distance relative. I think all, whether the owner wife, owner relatives, wife, all those will come under the fourth degree of the kinship. And accordingly, if those are employed, their salary also need to be benchmarked. Then the second question was small business relief.
Yeah.
Small business relief is available to all businesses except the qualified free zone person. Since qualified free zone person is eligible for the 0%. So condition is simple that as so long as your revenue is 3 million or below, then, and this is on the election basis, so you have to elect. There are certain businesses they are incurring the loss, though their income is below 3 million and they are incurring the loss. So to carry forward such loss, they may not go for the small business relief. Accordingly, government has given an option that if you want to go for small business relief, what will be the benefit? Benefit, suppose your revenue is 2 million, your profit is 1 million. Suppose you will not go for the small business relief, then you have to pay the tax on and above taxable income of 375,000. Suppose your taxable income is 1 million, then balance 625,000, you have to pay 9%. But if you opt for the small business relief, then you will not require to pay any tax irrespective of your profit, number one. Second, your corporate tax return will be in a simplified format. But you have to follow the arm's length principle, Article 34 of the Corporate Tax Law. It means all your contract transaction, you have to follow the transfer pricing regulation. So this is in the brief for the small business relief. I want to add one thing more. If the natural person's business or business income is up to 1 million, then such person will not require to do any registration or file return and pay the tax liability. It means government has given a benefit for the natural person, even if they are doing the business or business activity, so long as their income is within a 1 million, there will not be a tax liability, there will not be a registration requirement or filing the return. So in nutshell, as long as you are earning a 375,000, which is almost somewhere around 30,000 dirham taxable income, no tax. If you are doing business on an individual capacity, so long as your income revenue is 1 million, there will not be any tax or registration requirement. I hope that answered the question.
Right. Thank you, Nishanji, for
I think Yeah. Thank you, Nishantji, and I think thank you, Chiragji. I think wonderful. We covered almost all the questions, and I think we are able to resolve the queries of the participants. And I want to say that this session is very successful because we get the lots of queries and questions from the participant. And my request to the participant, if you missed any question, please raise to us, and our team will revert you shortly. Now, I also want to cover the one topic. There is lots of people ask about the like Mohan ji, Manoj ji, Anushatra ji, Hamid, Salman ji about the trainings of the on the corporate tax and the awareness and the knowledge enhancement. So I just want to share that, mentioned by the Nishant ji, we already running the short-term courses, the 6-day courses on the UAE corporate tax, and third batch is going to be start very soon on the 17th of November. And this is the weekend courses, Friday, Saturday, and Sunday. And CA Chirag Gupta and CA Nishant is also be the speaker, or you can the faculty of this program, along with the CA Atul Gupta ji, who is in absentia, is not able to join due to some unavoidable reasons. And the fees of this course is also very nominal. Is the in INR is the 11,800, and in AED is the 525. It's a very nominal fees. You can join this course. I think we are showing the interest in the UA corporate tax, and I can bet on that this course is going to be the value add into the your knowledge on the UA corporate tax. And second part is that if you want to be not able to join these courses, we also have the self-paced learning digital solution or the repository on the UA corporate tax in the Taxo, where you always get the 24/7 all the articles, all the regulations, all the decisions at a one place, and the supported by the flow charts, commentaries, and illustration, and the case laws from the global jurisdiction, and the monthly webinar. So all of we be updated, remain updated on the UA corporate tax. In fact, you can ask any question there, and our experts give you the answers. And this is from my side. And if anybody is interested, so our team will be contact you with the numbers of myself or Chirag ji or Juhi ji, who is the coordinating this program. And definitely we will meet soon. And I will again request to join this course on the weekends, which is very helpful, going to be very reaching. And now again, all the thanks to the participant, and especially thanks to our panelist, CA Chirag Gupta ji, CA Nishant ji, and wish you all a very happy and prosperous Diwali, because we are from the India, and this festival of lights is going to be, I wish, bring more prosperity in to the all the things. This is from my side. I think thank you very much. And Chirag ji or Nishant ji, if you want to add anything, please kindly add.
Actually, I was raising the hand to add for this course. I think we did not mention, but we successfully completed 2 batches of this course with a very high registration. The last batch, even the reviews are available. We already trained more than 100 people through this course. This course is very, within 6 days, you will have a commendable knowledge of the corporate tax, which whether you are going to implement a corporate tax with your tax consultant in your business, or if you are planning to start a career in the corporate tax, then also within a 6 day. And good thing is that this our course is on a weekend. Online, again, it is an online course, so the people sitting in UAE, people sitting in India can take the benefit. Even the reviews are available on the public platform, a very positive reviews of last 2 batches we cover, and we have a limited capacity of registrant. So accordingly, still some seats are available, and I will urge all the members for your all other questions. You can always register in this. What we do, we give a last 10 minutes for any of the questions you have. You can always ask to the speaker of that particular topic. Yeah, over to you, Chirag.
I think what I was about to say, I've already covered, Nishanji. So but just I would like to add on, in the previous sessions, still we are in touch with the students, with the participants. It's not like the course is over, so our job is done. No, this relationship is not ended after the course completes. Still is ongoing because the corporate tax is evolving. If you see, just this last 2 weeks, there was a new decision on the accounting standards. So one of the participants has called me and was having a question, so which we replied. So the beauty what we offer is not a one time. We offer a long time because corporate tax is now forever. Once it goes live. So it's in the interest of all, and we are here just to spread the knowledge, just to spread the awareness on the corporate tax law. That's it. That's it from my side. Over to you, Manoj or Juhi ji.
I think thank you very much, Nishant Rayma ji, for the value addition, and Chirag ji, and talk about the course. And now I also thanks to the participant. Definitely we will meet very soon. And thank you very much.
Thank you.
Thank you.